All right, we're going to roll. It's 2 p.m. We are in another investment hacking live training, and we are going to talk today about tax-free returns in your retirement, how to do it, what it means for you. The value is pretty incredible. And this is one tool that is pretty amazing. I am Joshua Dudgeon with realestateinvestmentresults.com. We invest in real estate by buying, fixing, and selling rehabs and building new. We do some land deals, we do quite a bit of stuff. And this is a free training that we're doing to really kind of bring people up to speed. The real estate market is insane. People are freaked out, but it is what it is. And we are really at the opposite end of what happened in 2008. And this is going to go on for some time. So if you're interested in knowing more about real estate, investing, or getting money into deals, we can talk about that as well. But today we're going to do a training based on what a Roth IRA investing means to you and your portfolio, and what we can do from how it changes our lives from being able to get some tax-free money in our retirement. And we're going to just talk about some numbers in there as well. Before we get started, I'd like to welcome you. This is a very exciting topic because if you really pay attention to tax, again, can you hear me now?
Yes, my bad.
That's okay. We're going to do questions at the end. Welcome to the Investor Hacking Live training. We do have some kinks that we're still trying to figure out on this system. But just bear with us. We'll get going. We're going to talk about investing tax-free in retirement and what the Roth IRA does for you. Before we get started, you can leave your questions in the chat. There will be some time to ask questions at the end as well. But any questions you have, go ahead and feel free to put them in the chat. And we'll start with, I have to read a little legal disclosure, and we'll go from there and then move on. The disclosure says, real estate investment results, its officers, its members provide no legal or professional advice. You should always consult a licensed professional, a professional appraiser, a real estate agent, or financial advisor when making any decision regarding the purchase and sale in real estate. Information obtained from Real Estate Investment Results, reir.co, or its members is intended solely for general guidance in exchanging, buying, or investing in real estate, and does not constitute legal, financial, tax, appraisal, accounting, or other professional advice. Because real estate contracts, closing procedures, and disclosures are guided by state law, always consult a local professional whenever engaging in real estate transactions. With that, I'm Joshua Dudgeon again. You are on a live training called Investing Hacking Live. It is 2 p.m. We do this training 1 to 2 times a week. Generally, it's Tuesday and Thursday, but sometimes we do it on Tuesday and Friday. And we're really glad you're here and excited about it. I got started in the 2008 crisis as my first deals started happening, and did many rehabs. And now, because our inventory is so short, we're doing mostly new builds. And I'll kind of get into some of that at the end, but we'll talk first about what it means to be tax-free in retirement. So today we're going to talk about the Roth IRA. There's two types of IRAs. There is a Roth IRA and a traditional. The main difference between the two is the Roth IRA is you pay taxes on the money that goes into it. Through traditional IRA, you are tax exempt going into it, and you pay your taxes at the end. The reason that the Roth IRA is unique is because there's very few, there are others, but there are very few ways to get tax-free in retirement. And so any growth in your Roth IRA, when you hit 59 and a half, you can begin to withdraw the money, and there is no taxes applied. And we don't really know at any given time where the tax rate's going to be. Right now, the tax rate is the lowest it's been in years. But it has been much higher, and it could possibly, they're threatening to make it higher right now. I don't know if they're actually going to get it done, but If you get to retirement, you have a portion of your retirement in tax-free, it really helps your ability to live without paying extra taxes in retirement. A lot of people don't realize how that they lose a lot of their deductions when they get to retirement. And so their taxes actually go up depending upon their personal situation. And this is just one tool that keeps pays on your income. I found out about a week and a half ago that and I can't believe I didn't know this before, but your Social Security that they collect, which is a tax, and you pay taxes on your income and you pay the tax Social Security, the government takes your money, and then when they give it back to you in retirement, that is considered taxable income. So it really is a double taxation situation. So the Roth IRA is one of the tools used to offset this. So there's a couple of quick things that I want to cover about it. First of all, there are limits to how much you can put in every year. It's $6,000 for an individual, and I believe it's a little higher than that for if you're a couple. If you're over 50 years old, it's $7,000 a year. And when you do if you haven't opened a Roth IRA yet, you can pay the last year's. You can install last year's amount before April 15th is the cutoff, and then after that, so you can basically put 2 years in the 2022 year, the 2021 year, and the 2022 year before April 15th. Once you cross that deadline, you can only put the 2022 year in. One of the best opportunities is the fact that it can grow tax-free. All of your growth is free of taxes forever. And then you're actually allowed to pass this instrument on to your loved ones if you don't spend it all. And then they are allowed to keep it and grow it for 10 years. It used to be they could grow it forever, but they changed the law a few years back, and they can only grow it for 10 years. And then at the end of 10 years, they do have to take it out. But again, it's tax-free to them to take it out as well. There are limits on the amount of income you can have to actually have to start a Roth IRA. It's $139,000 for adjusted gross for single people, and it's $208,000 adjusted gross income for married people. And then the reason I'm telling you about it today is because we actually are able to use people's Roth IRAs and investing. Some of our investors that come in with us, and we do pay a higher rate of return on investment capital, so it allows them to grow their Roth IRA much more quickly than if it were in like CDs or money market accounts. But the context is that you have to move it to a self-directed IRA account and take advantage of being able to invest in different opportunities than what your standard investment company like Edward Jones would allow you. They would say they have a self-directed, but they only have 5 or 6 things you can invest in. And you are allowed to invest in much more if you use a self-directed IRA account. The good news is I don't have to give you all the answers today, because next Tuesday, we are going to actually have a self-directed IRA account representative on this call at 2 o'clock to go over and answer any questions that any of our prospects or any of the people that are on this call would like to have about IRAs. But I want to cover today some of the changes in the values of what happens when you invest, even based on what we pay our investors versus paying them, having to pay taxes on it or having it tax-free. A couple of the other advantages are that there's no age limit, and you can put money in your account for as many years as you want, as long as you have earned income that qualifies. There are no employer plan restrictions, and there is no tax to your beneficiaries, like I said before, if you pass it on from after, like in your will. So there's a huge advantage of being able to pass money on tax-free. But we're going to talk about numbers. So we pay our private lenders 5 points and 7% as our baseline right now on investment capital. So what that means is you have, let's say, a $500,000 cash input for round number's sake. on a new build. And in that $500,000, the 5 points represents $25,000. So at the closing table, the investor, the private lender sends $500,000 to the closing table. There's a note and mortgage written, and immediately the face value of that note and mortgage is $525,000. So if I were to pay that note back on the second day, they immediately gain that 5 points, and then it's 7% a year after that. The reason we do it that way is because we can sometimes spend the money more than once a year, and when we spend the same money twice a year, or we actually get closer. Instead of it being 5 plus 7 equaling 12%, and it actually ends up being 12.35% with this. It ends up getting closer to 17% by spending it twice a year. So we're rewarding our private lenders for coming into a deal and then getting paid out and then coming back. All of our deals are tied to a real property. We never borrow more than 75% loan to value. Most of our deals are between 60 and 67, 69, somewhere in there. So that's really the biggest protection for the investment capital. We have a note and mortgage. We have it's a first position lien. We have hazard insurance and title insurance that is attached so that the deal can be sold and the transaction can happen smoothly. So what I'm going to go through right now is I got a little spreadsheet. We can send a handout to you later if you're interested. But on $500,000, the ROI of 12.35% represents a $61,000 gain on one deal. So that's one deal in 1 year. And we're going to talk about being deals or years because we can do more than one deal in a year. So this is either deals or 5 years if we did one deal a year with you. The net, the tax amount, if you're in the 39% tax bracket, is $24,000. So your $61,000, you would pay $24,000 on, and so your net after tax is $37,667. Now, if the money came from a Roth, then that $61,750 stays $61,750. So let's say that you bring that money back in and you gain another return on investment. We'll say you put the whole thing back in and keep spending it as the entire amount. The second time you pay on the 39%, you pay $25,000. Your net after tax is $40,000. Your net gain again is $69,367. So after 5 deals or 5 years of just this investment, you gain you gain $176,091.60 more by having it in a Roth IRA. So the $500,000 would turn into $718,933 if it was taxed in a normal way. If it was in a Roth IRA, that same $500,000 would end up being $895,025. So it's $176,000 more just by using a Roth IRA. Now, the question is, what happens if I have a Roth IRA and I can't? It's not the full $500,000. You're actually allowed to use the Roth IRA as one lien position holder, and then you can use your own capital as the second. So you can actually choose 2 funding sources to do one deal. It's just that whatever the rate of return that goes to the one funding source that gets that's taxed, and then whatever's in the Roth IRA actually comes back and gets in the Roth IRA. So we actually had people that sometimes have to split them because they don't have enough to do in the Roth to do the whole deal. The other thing is we've had people do deals where they actually start with one amount of capital and then they keep rolling it, and they roll the entire amount that comes back, and it grows pretty substantially. Like I showed you there, it's quite a bit of difference over the two different amounts, just one being Roth IRA versus doing it outside the Roth IRA. There is other ways of utilizing capital, like in the regular traditional IRA, it would be growing tax-free until you take it out. So it would grow very similarly, and you get a deduction on the way in, but then when you go to take it out, you do have to pay taxes in retirement on it. There's a couple of interesting things that are being floated as changes that may occur. They haven't occurred yet. One is that they're talking about, you're allowed to actually take your traditional IRA and convert it to a Roth IRA $100,000 at a time a year. So if you have a traditional IRA, you can move it to a Roth IRA. You have to actually pay the taxes on it. So let's say you're in a you're in a 25% tax bracket. When you move the 100,000 over, you'd have to pay 25,000. If you're in 39% tax bracket, you pay $39,000 in taxes. Now, I believe you can move the whole 100 over, and then the tax bill is like 39,000. And I had an investor one time who had a paper loss and on a business, and he had the ability to move over a chunk of his Roth IRA, or to a chunk from his regular IRA to his Roth IRA, because he was able to write down that loss against the cost of that tax, and it ended up being free for him to move over $100,000 from his traditional to his regular IRA. So there's a couple of interesting caveats that can be done if you have a traditional IRA and you want to move it. The biggest advantage of being in the Roth IRA is you don't know where the tax base is going to be, the tax requirement is going to be when you get to retirement. So this is a way that it will not cause you to have the Roth IRA will not have you have the ability to get some income tax free in your retirement. The questions, I actually am seeing some questions pop in. Is there a particular type of Roth IRA you need to have when doing real estate investing with it? It needs to be a self-directed IRA. And if you already have an IRA or a Roth IRA in the like, let's say Edward Jones or Prudential, when you go to speak to them about, hey, I'd like to invest money in real estate, they're going to say, well, we don't really allow that. We do have, you're like, well, I'd like to move to a self-directed IRA. Well, we do self-directing, and many times what they'll do is they'll say you get to pick of 5 to 10 different things to invest in. So technically, you've got to go to a secondary company and have those funds transferred to an intermediary that can handle the self-directed IRA and let you pick where you want to place the investment. There is a list of rules that we will go over next week that you can, what you can invest in and what you can not invest in, and especially when it's coming to real estate, or you can actually invest in gold and other things as well. We'll go over that next week when we have the expert on the phone that is one of the intermediaries. Is there a minimum or maximum number of times I can roll my money over? With us, it just has to do with how many times we can get that money invested in a deal and then back out. We're trying to get it to go faster than it already is, but there is no limit from the Roth's perspective. You can grow, if you have a Roth IRA and you were able to grow that money by 1,000%, that 1,000% growth is actually profit that is not taxable because it's in your Roth IRA. The Roth IRA technically is just a piece of tax code, is what it really is, that says that you can do X, Y, and Z, and as long as you stay within those boundaries, that money is tax-free because it's declared Roth IRA. And so when you use these intermediaries, what they're doing is they're making sure that you do not violate any of the rules so that this money stays tax-free forever. Do you have any investment opportunities where I can earn more than 5.7%? We do. It has to do with how much capital we want to put to work. We have different opportunities. If you want to have a discussion on that, we would love to. My cell phone number is 608-306-1199. You can text me or call me there, and we can go over deal structure. I can actually give you, I can go over one of the ones we're selling right now, one of the packages we're going through right now. It's a $690,000 investment as a duplex. The 5 points represents $34,500. The face value of the investment is $724,000. So $690 comes in. It'll be worth $724,500 on day one. The 7% return on the whole year is $50,000. So the total return on investment on the $690,000 is $85,215. The finished value of that property, because it's a duplex, they're going to sell both sides, is $1.1 million. And so your LTV percentage is 62.73%. And then the annualized ROI is 12.35%, like I said before. This is the actual picture of the duplex. We are actually building several of them out. on one street, and it's all prepped and ready to go. So if you're interested in that, you can reach out to me at 608-306-1199. The next question is, when can I withdraw the money from the Roth IRA? When you're 59 and a half is when you first can start withdrawing it. You can withdraw money out earlier, but you have to pay penalties, which is basically paying the tax. So if you're going to put money into this Roth IRA, this is a long-term investment from our long-term retirement plan. If you need money to be utilized, you should actually have some money saved in case you need to utilize it. That's something that you would keep in more like a money market account or a regular stock account. This is about protecting a piece of your retirement from taxation in retirement. So Roth IRA, like I said, is a piece of tax code. So it's not a particular type. It's who is the intermediary, who is the one, and that's who we're going to have on next week. Is we're going to have a company that actually, a guy that actually works for a company that they actually are an intermediary, and they're going to go through all the details of how you do that. I'll interview him and ask him a boatload of questions, and then you guys will have an opportunity to talk to him and ask questions as well. With that, I thank you for being on today. Like I said, if you have any other interest or questions about real estate, we're going to have more and more of these going on about twice a week. If you have a topic you'd like me to cover, you can suggest a topic. You can text me about that as well. With that, I hope you have a wonderful weekend, and we will be sending out links for the Tuesday call and have someone on to interview. And we do have there's another opportunity for tax-free investing that we're going to be looking at as well. It's a different product altogether in a few weeks. So this topic is one of my favorite topics because it seems like that all we do is get taxed once you start making profit in life. So anybody that can really, I believe in paying all your taxes, but don't pay any more than what you owe. And these are tools that you can use to mitigate some of the tax liability that people have. With that, have a wonderful weekend. Thanks for coming on the call. Feel free to reach out to me on my cell phone at 608-306-1199 with any questions. You can say that number in your phone. I'm Joshua Dudgeon. I'm up in Wisconsin, and you can just save me as Joshua Investor Wisconsin, and I do take calls all the time. If you don't get me, I might be in a call like this, so go ahead and leave a message and I'll reach back to you. Have a wonderful weekend, and we'll see you next Tuesday.